Okay, so what a weekend. Global markets were just thrown into absolute chaos after a fragile ceasefire between the US and Iran. Well, it completely disintegrated. We saw oil surge, stocks tumble, and yeah, the risk of a major supply shock, it just became very, very real.
So let's just dive right into the immediate financial fallout. I mean, the market's reaction was, wow, it was severe and it was incredibly swift. First up, take a look at this. We're talking about the global oil benchmark, Brent Crude. It saw a massive single-day surge of 5.6%. Now, a jump like that sends immediate shockwaves through an entire global system that, runs on this stuff. And by the time the markets closed on Monday, it had settled at a staggering $95.48 a barrel. You know what's really wild about this? That huge surge completely wiped out the major losses from just the session before. You remember, back when it felt like a breakthrough was actually possible. And listen, this wasn't just an oil story. Oh no. The shock rippled right through the stock markets. We saw futures just tumbling across the board. Dow futures, they dropped over 400 points. And of course, the S&P 500 and the Nasdaq followed right behind. Okay, so you have to be asking, what on earth triggered all of this panic? Well, it all boiled down to a single critical flashpoint out at sea. And this whole crisis, it unfolded with just incredible speed. I mean, think about it. Early Sunday morning, a U.S. Navy destroyer, the USS Spruance, intercepts an Iranian cargo ship. Then, by that afternoon, President Trump is on social media confirming the seizure. And just a few hours later, Sunday evening, Iran's Revolutionary Guard Corps makes a huge move. They declare the crucial Strait of Hormuz is closed to everyone.
You can really see the complete breakdown in diplomacy just by looking at the rhetoric from both sides. On the one hand, you've got President Trump warning that Iranian power plants and bridges could be destroyed if a deal isn't reached. And on the other, you have Iran's parliamentarian speaker, Mohammad Bagher Ghalibafov, saying, look, we do not negotiate under the shadow of threats.
Now, it's important to understand, this sudden crisis, it's not some isolated incident. Nope. It's actually part of a really frustrating and, frankly, recurring pattern that has the markets completely on edge. Traders have a name for this, and it's a painful one, the whipsaw pattern. I mean, just last Friday, think about it. Iran briefly declared the strait open, and boom, crude prices tumbled over 10%. But then, just as quickly, the strait closes again, and prices surge right back up. It's enough to give you whiplash. And commodity analyst Rory Johnston just captured this frustration perfectly. He compared it to Charlie Brown trying to kick the football. He said, and I quote, "While we keep getting these sell-offs and it keeps seeming like we're about to finally get that football, Lucy pulls it away, and we're back to where we started." I mean, is there a more perfect analogy for the maddening back and forth that traders are dealing with right now?
Okay, let's zoom out for a second, because to really get the scale of what's happening here, we need to talk about why this one specific location is so incredibly critical to the entire global economy. And that really brings us to the central question, right? How can one narrow little strait have such a massive, massive impact on everything? Well, we're talking about the Strait of Hormuz. It's this narrow waterway that connects the Persian Gulf to the Gulf of Oman. It is the textbook definition of a choke point. And when it comes to global oil, believe me, it is the choke point. If you want to understand just how important it is, just look at the numbers. About 20%, a fifth, of all the world's seaborne oil passes through this one little waterway. To put that in perspective, that is roughly 20 million barrels of oil every single day. So when that choke point closes, you're not just blocking a bit of traffic. You are effectively cutting off the main export route for some of the world's biggest producers. We're talking heavyweights like Saudi Arabia, the UAE, Iraq, and Qatar. All of their oil is, it's essentially trapped. So what does this all mean for the future? This whole crisis is raising a really serious question. Are we witnessing the end of what was a pretty stable economic period? Interestingly, there's one thing that's kind of holding things together for now, and that's the fact that corporate health has been surprisingly resilient. For example, analysis from Morgan Stanley shows that S&P 500 companies are still expected to report double-digit earnings growth, and get this, for the 6th straight quarter. But, and this is a big but, that resilience might not last. As one portfolio manager, Brian RCC from Ford Asset Management put it really bluntly,
He said, it's clear we're not going back to the Goldilocks scenario. And what he means by that is that whole pre-conflict environment. You know, that sweet spot of stable growth and low inflation, yeah, that's probably over.
And that leaves us with this final and, I think, crucial question. With the world's most critical oil artery effectively shut down and with no clear resolution in sight, is this kind of global supply shock just the new normal? Because right now, that is the single biggest variable shaping global risk, inflation, and policy for the foreseeable future, something we all need to be thinking about.